Building credit is an essential part of financial management. Unfortunately, many individuals have poor credit scores, which may be preventing them from taking advantage of financial opportunities. Fortunately, there are simple steps you can take to fix your credit score in less than a day. By following the correct steps and utilizing the right tools, you can start rebuilding your credit score and get back on track toward a financially secure future. Review your credit reports. Reviewing your credit reports is essential for understanding and fixing your credit score. By keeping track of your credit report, you can identify any errors or discrepancies early on, take the necessary steps to correct them, and ensure that your credit score remains healthy. Additionally, you can use the information in your credit report to create a budget, build a good payment history, reduce debt, and plan for future financial goals. Knowing what's in your credit report will help you make smart financial decisions and improve your overall financial health. How can you get your free report? Each year, each of the 3 major credit reporting agencies will mail or email a copy of your credit report to all consumers who request it. You should always receive your free annual report within 30 days, even if you have not requested it. If you are unsure how to request your report, you can contact one of the 3 agencies directly. A credit score is a number calculated by using the information on your credit files, and that helps lenders decide if they want to approve your loan application. You can check your recent credit card and mortgage debt, as well as other loans, with the bureau where obtained them, but you cannot get your credit score. How to use this information in your credit report. The main goal of your credit report is to protect you, so if there are any mistakes on it, the bureau will work with you to correct them. If there is anything that looks wrong, use this information as a starting point for a conversation with the bureau about your report. Get a handle on bill payments. Having a good credit score is essential for obtaining loans and other financial services. One way to keep your credit score in shape is by getting a handle on bill payments. It is important to pay your bills on time and in full, as this will help you maintain a good credit score. Late payments can have serious consequences, including late fees, higher interest rates, and even the loss of your account. With a handle on bill payments, you can make sure that you are paying your bills when they are due and avoid any potential penalties or negative effects on your credit score. Paying your bills on time will also help you avoid any potential late fees. It is important to note that if you are unable to pay a bill for whatever reason, it is recommended not to incur any additional fees. If you owe a bill and it has accrued late fees, contact the company in question and try to work something out. Taking advantage of the various resources and discounts that are offered through credit cards can also help you build and maintain a good credit score. For example, if you use your credit card for most of your monthly expenses, it is important to be on top of your payments in order to avoid any late fees. Take advantage of the rewards programs that come with some cards, as well as the low interest rates associated with them. Be sure to pay off the entire balance on time each month in order to avoid potential interest rates or penalties. If you have a history of applying for multiple loans, your credit score may seem lower and you may find it harder to borrow money. Check your credit score before applying for a loan. Aim for 30% credit utilization or less. Credit utilization is one of the most important aspects of your credit score. Aiming for a 30% credit utilization or lower is essential to maintaining an excellent credit score. This is because it shows creditors that you are responsible for your money and can handle debt without getting overwhelmed. A high credit utilization ratio could indicate that you are overspending and not managing your money properly, which can have a negative impact on your credit score. The best way to improve your credit utilization ratio is by paying off debt. If you're struggling with debt, see if you can reduce the interest rates on your debts by switching to a lower rate card or refinancing it through a company. How long should I wait before I apply for credit? The length of time that you should wait before applying for new lines of credit depends on your personal circumstances and financial situation. If you are new to the workforce and looking for an entry-level job, waiting as long as possible could be beneficial in order to establish good credit and a long-term record of employment. Limit your requests for new credit. and the hard inquiries with them. Having too many requests for new credit can damage your credit score. This is because hard inquiries, or requests you make to check your credit score, can lower it by a few points. Limiting your requests for new credit will help you maintain a healthy credit score and ensure that you don't face any issues down the line. Be sure to only apply for the credit you need, as opening too many accounts will also impact your score. 2. Don't ignore your monthly bills. Make sure they're paid on time every month in order to have a healthy credit score. You'll want to make sure that your bills are paid in a timely manner and that you don't accrue any late payments. Late payments can cause your balance to credit ratio to drop and can result in a lowered credit score if this continues. 3. Pay off your debts. In order to maintain a healthy credit score, it's important that you pay down your debts on time and don't incur any new ones. This will help prevent late payments and defaults on borrowed money, which both have negative impacts on your credit score. 4. Don't open too many accounts. Having too many open accounts can lower your credit score by 3 to 5 points for each account that is opened, so refrain from opening new accounts unless you need them. This will also help ensure that you are able to manage the number of inquiries associated with each account. Make the most of a thin credit file. A thin credit file can easily become a hindrance in improving your credit score. It is important to understand and make the most of a thin credit file in order to be able to fix your credit score. With this knowledge, you will be able to take the necessary steps and build an impressive credit profile that will help you get access to more financial opportunities. What is a thin credit file? A thin credit file is a low-risk financial profile, typically due to having little or no debt on the account. It occurs when there are not many open, active accounts in the credit report. More than likely, it's because you have only applied for 1 or 2 open loans in your life. How does a thin credit file affect my FICO score? A thin credit file affects your credit score in 2 ways. First, it makes the account appear less risky due to the low number of open accounts. Secondly, it has a negative effect on the length of your credit history. A thin credit file typically means that you have only made small purchases recently, or your loan was paid off quickly, and you may have never used a revolving line of credits like an open car loan or student loan. This type of profile will also make it harder to get approved for applications such as mortgages and auto loans, because there is not enough information on the report to predict whether or not you can be managed with those types of loans. If you qualify for other types of loans, including credit cards, bank accounts, and personal lines of credit, your score will be higher because the lending company can get more information from other sources on how likely you are to repay them. Thank you for watching.